Hello pro traders, welcome to another Elliot with concept. It's been Michaels. Today in this video I will be sharing with you the advanced course which I prepared for you guys about the leading diagonals. Today we'll be doing an advanced leading diagonal session, and this is going to be episode 1, and it's actually the first time I'm actually making a video on leading diagonals. I'm going to be making other videos about other Elliott wave structures which you should be looking out for in the course of your trading life.
And I thought, wait a second, that's got to be a principle in life. What if I stopped looking for opportunities to make money in the markets?
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes. Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
If you're new to this channel, I recommend that you subscribe and also smash on that notification bell on this channel so you'll be getting all the information whenever I make videos such as this one. Alright, so here I'm going to be sharing with you some of the tips on how you can approach the leading diagonals and how you can start to wave counts on leading diagonals and what it looks like and how you can easily identify it on your chart. Okay, so looking at this, I'm going to be sharing with you this first example because the leading diagonal is said to be 53535 structure. Okay, so what do I mean by this 53535 structure? It means that the very first wave here, or the very first wave one here, is most likely to be an impulse wave, and the ABC, the correction down here, which is oftentimes the corrective patterns of the next wave here, is oftentimes a corrective pattern, and sometimes it could be inside of a parallel line, and the next one should also be in an impulsive mode, and the next one should also be in a corrective mode, and the next one should also be in an impulsive move. So this makes up the 5 3 5 3 and then the 5 pattern. So that's the origin of the 53535 patterns, and possibly that you've heard about some other in some other video or some other course on some other educational materials concerning the Elliott wave. But here I've prepared this table for you guys, and I just want to quickly share with you also this one here. This is going to be giving you a full explanation as to what this means. Okay, so we're going to be setting examples on in an uptrend. Okay, so in an uptrend, this is what it means. This is what it looks like. A 5-3. Okay, oftentimes we have different rules and guidelines that bound Elliott wave, but I'm going to be giving you a very simple tip here. Many times price action doesn't really appear or really come forth on a particular chart the way you would expect it to be based on the textbook definition. Sometimes things could change, sometimes there could be some differences, sometimes there could be some a little bit of shift, be it how they are formed. But I want to quickly give you this one here. In all chart formations you find in the market, you need to first of all, one, identify what makes the most sense, and also what are the possible options you have in terms of the ulterior or opposite wave count. If it's not this, then it could be this. Then you look for what makes the most sense. Okay, so in the previous example which I shared to you, I said that in an uptrend, a leading diagonal could be a 53535, but in this other example here, it could be different. Okay, so what really makes a leading diagonal is in its formation. Okay, so simply if you're having an uptrend, maybe it's some sort, and then you start seeing some corrective waves, looks like this, then you can start to plan for the ending diagonal for this one in terms of if price have gone so far. Okay, maybe so far that could be an ending diagonal. But if you have price drop some sort in a downtrend and then starts creating this kind of formation, and then you can expect that this could be a leading diagonal. Okay, so I'm just going to go erase this. I'm going to draw this one more time. If you have a downtrend, okay, and price drops one more time and then starts to create this kind of formation, okay, then you can expect that this could also be a leading diagonal, and price could also want to form that, and in the extreme could also be a wave 1, and the low area could also be wave 2. Sometimes for a leading diagonal, you want to be targeting the 38.2 Fibonacci retracement, okay. The 38.2 oftentimes have price respected around and then to the 50%, okay. So it oftentimes, out of 100% of the time, we've seen price bounce off 38.2 around area, okay, or also 50% Fibonacci retracement of the swing low right here to the swing high right here. So in this advanced course here, I'm going to be sharing with you how you can also apply the Fibonacci tool as well into the leading diagonal as well, in order to pinpoint the exact area which or territory which you should start looking for the next bullish run to come in. Okay, so let me just go ahead explain all this from this leveling, which this one here is I've made my research here on this one here, and I've come up with these rules and guidelines for the leading diagonal here. So number one, a leading diagonal consists of 5 waves, level 1, 2, 3, 4, 5. Okay, so this is an optional labeling. Okay, so you can actually, sometimes some traders may actually label it as A, B, C, D, E. Okay, so it actually fits. It all depends on how best you want it to be, but I think the best labeling for a leading diagonal should be a 1, 2, 3, 4, 5, because a leading diagonal is an impulsive move. Okay, it's an impulsive move. It's not a corrective move, it's an impulsive move. So you want to be labeling it as an impulse. Okay, the number 2 rules and guidelines for the leading diagonal is that the wave 2 and wave 4 always are corrective. So what do I mean by wave 2 and wave 4 always are corrective? In the leading diagonal, here is what I call the wave 2. Okay, so this is the wave 2 here. So oftentimes when price is dropping to the wave 2, there are most times corrective patterns. Okay, so the wave 2 and the wave 4 here, so this is the wave 4 and the wave 2 are mostly corrective pattern. They are mostly corrective patterns, slow choppy price action within a parallel line. Okay, so if I just go ahead add up the parallel line to this one here, you see that this is a slow choppy price action within parallel lines. Okay, so this here, I'm going to just go ahead add up a line to this one. I'm going to add simple line to this one. So this is a slow choppy price action within parallel lines. So you see this, and then price breaks to the upside. Okay, so wave 2 and wave 4 oftentimes are corrective pattern. The number 3 rules and guidelines for the leading diagonal is that the wave 1, the wave 3, and wave 5 can be corrective or impulsive. Okay, so it could be corrective or also impulsive, but this one is also very important, that the wave 1 is usually the longest wave. Okay, the wave 1 is usually the longest wave. Okay, it's not the shortest wave, is usually, oftentimes than not, it's oftentimes the longest wave. Okay, so wave 3, the 5th one is that the wave 3 cannot be the shortest wave among 1, 3, and 5. Okay, so it cannot be the shortest wave. So which do I mean by the wave 3? This is the wave 3 which I'm talking about here. This is the wave 3, and it should not or cannot, based on the rules and guidelines, be the shortest wave. All right, so all these, the primary movements, or one of the things that create price movements, which is also known as price actions, is the overall market participants' behavior. So this is a typical reflection of the market participants' behavior. Oftentimes, I've seen that price sometimes create a formation like this, but oftentimes because of this kind of formation, that we've also developed some rules and guidelines to govern this, that the certain rules must be met before we can as well put up our trading gamut and then get ready to take a trading decision on this one here. So let's look at the 6 rules and guidelines of the leading diagonal. Leading diagonals occur in the position of the first wave of an impulse or wave A of a zigzag correction. Okay, so what does this mean? Let's read it one more time. That leading diagonals occur in the position of the first wave of an impulse or wave A of a zigzag correction. So what do I mean by zigzag correction? For those of you that knows what a zigzag correction is oftentimes a 3-3-5 formation. Okay, it's a 3-3-5 formation. That's what a zigzag is. It's a 3-3-5 formation, and I can label this as A, B, C, A, B, C, 1, 2, 3, 4, and then 5 there. So it oftentimes appears on the first wave of an impulse of or wave A of a zigzag. Okay, so what this means that in the case of an uptrend or in a situation of an uptrend, that we could expect that a leading diagonal could also appear in the very first wave, which is the wave A, and then we can expect this to continue as a B, and then the C, and then A, B, C. All right, let me go ahead and label this, and then 1, 2, 3, 4, 5, and then okay, so I'm gonna go ahead and label. Okay, let's go ahead and label this. So this is now our A, B, and then C. This is our zigzag. This is a typical zigzag. Okay, this is a typical zigzag. So this is our zigzag, what our zigzag looks like. Okay, so you need to understand this appears here. So these are the rules and the guidelines to the leading diagonals here. Okay, so with that, let's just go ahead and take up some few examples. So if you do not understand or you still need more clarity, you can as well drop in the comment section the part which you need more clarity on when it involves a leading diagonal, and I will be glad to answer you in the comment section as well. Okay, so let's take a few examples here. And if you could pause this video for a while, if you could pause this video, this is actually recording, so I can't really pause this video. I'm just gonna go ahead and ask you to pause this video and then take a look, take like 10 seconds, 15 seconds to look at this picture here. If you can actually identify the wave count and then count it yourself. It's very easy to identify this one here, and I'm just gonna go ahead and put up those labelings there. Okay, so here I have the very first impulse here, and I could label this as my wave A, and I could label this as my wave B, and I could label this is an impulsive wave, so I could put this as my wave C, and I'll put this as my wave D. This is a 3-wave movement, and I can put this as my wave E. So this is what a typical leading diagonal looks like, and this is how it looks like. This is what it should be. So you can go ahead and label this as either a wave 1, wave 2, wave 3, wave 4, and then a wave 5. Okay, so that is a very good typical example of what it should look like. So this is actually my labeling here. I'm going to share it with you now. This is my A, B, C, D, and then E. So this was one of the trades I was looking out for, and I was ready to take that next short position to the downside after that this formation here. I'm going to also share with you in another video what happens when we have a formation such as this, because many times or sometimes in the market we could find formations such as this good 5-wave movements here, and price would just fall afterwards. So I'm going to give you some examples, rules, and guidelines why this happens and how you should plan about how you can approach this with the right mindset. Okay, so let's take another example here. I'm going to share with you only these 2 examples here in this video here, because I don't want to make a too lengthy video on this one here. So I'm going to share with you another example. Take some few minutes to look at this price chart. Okay, can you really make out, can you really plan, or can you really label this price chart? Okay, so let me just tell you what is different, or the difference between this price chart and the previous one we labeled. Okay, so here if we go ahead put up with 1, 2, 3, 4, all right, you know that, and then with 5. Okay, so we're gonna you know, we still having some waves left, so you're going to be labeling this as 6, maybe 7. Okay, so that's crazy. So let's put up some labelings on this one here. So this was a corrective path here, and we've dropped to downside. So I would assume, I'll start to lay an assumption that this is the end of the wave here. So I'm having a very first impulsive wave, so I'm going to label this as my wave 1. Okay, so I'm going to label this corrective wave as my wave 2, all right, of the higher degree. And then I'm going to be looking at this formation here. So I have a 5-wave move now. I have a 5-wave move here after this leveling. So I'm going to put up my A, my B, my C, and my D, and then my E right there. So this price movement here, I'm going to label this as my wave 1, wave 2, and wave 3, because this is the end of this wave here. And this price movement here, I know oftentimes traders look at this as wrong, okay, because if you're looking at a leading diagonal, I pointed out previously when I started this video, I told you guys that leading diagonals are actually impulsive waves. So it is very, very, very okay for leading diagonals to form a wave 3, okay, by rules and guidelines of the Elliott wave. Wave 1, price should not retrace. Wave 4 should not retrace below the price origin of wave 1, and number 2, that wave 3 should not be the shortest wave. So here we're looking at wave 1 here, and then look at the price distance traveled from wave 2 to 3. So it's actually the longest wave for this one here. So this labeling fits the criteria. So let me just go ahead share you what I label this as. So this was my labeling here. I labeled this as my wave 1, my wave 2, A, B, C, D, E as my wave 3. So price develops, I had to adjust my wave counts. Okay, so here this is what happens next. Let's look at what happens next. And this was how nicely price developed, and I was able to have another kind of formation such as this one here, which also formed as an ending diagonal, and that created a wave 4, and then we exploded to the upside as the wave 5 here. So you look at good. This is one of the examples which I love to share with the students as well, because it's one of the most classic examples I could use to explain the leading diagonal and also the ending diagonal. As you can see that this here structure became a leading diagonal, and this one here became an ending diagonal, and that created the wave 4, and we then had price explode to the upside. Okay, so this is a very simple and unique way to plan your trade using the Elliott wave concept when it comes to leading diagonals. So I'm going to be back with more videos explaining, also with more examples of how you can identify leading diagonals and also ending diagonals on your chart using the concept of the Elliott wave. I love you all. Please subscribe to this channel and also share these videos with friends. That will be the best. Thank you, and it will also help in the creation of more videos such as this one. See you on the next video. Do you know how long I've been waiting to do this video?